This video is in our series on bad tax ideas. This is about starting an LLC to be able to deduct everything. Now, my disclaimer I want to start with is that this is not tax or legal advice. Everyone's situation is different, so talk to your own qualified professional before acting on anything you hear in this video. The pitch: start an LLC and you can deduct all of your expenses. But the reality is that an LLC doesn't magically make your personal expenses deductible. You don't suddenly unlock new write-offs or secret tax loopholes just because you filed a form with your state. This is one of the most common misconceptions I see online, and it's what I sometimes call fraud with extra steps. People go through the motions of forming an entity to make what they're already doing look legitimate when the underlying issue is still the same. They're trying to write off personal expenses that aren't business related. Here's how it really works. Forming an LLC or a limited liability company doesn't create any new deductions. It's a legal structure, not a tax classification. For federal tax purposes, the IRS really ignores the LLC itself unless you tell them otherwise. So a single member LLC is taxed by default as a sole proprietorship. You report everything on a Schedule C. A multi-member LLC is taxed as a partnership and files Form 1065, or you can elect to be taxed as an S corporation or a C corporation by filing some additional forms. So when people say, I formed an LLC, now I can write everything off, they're missing the key point. The IRS taxes LLCs using the same rules as every other business. So what can you actually deduct? Under Internal Revenue Code Section 162A, you can deduct all ordinary and necessary expenses paid or incurred in carrying on a trade or business. Now, ordinary means it's common or accepted in your line of work, and necessary means it's helpful and appropriate for running your business, not personal, not optional luxuries. Legitimate deductions include rent for business property, office supplies and utilities, employee wages and benefits, marketing and advertising, professional fees like legal and accounting, business insurance, those kind of things. What's not deductible? Personal, living, or family expenses. Vacations disguised as research, your mortgage or groceries, your daily lunch. You can't have your business buy you lunch every day and call it a deduction, for example. The IRS allows meals that are directly connected to your business, not your regular weekday lunch routine. And record keeping still matters. The IRS requires proper documentation to substantiate every deduction. We're talking receipts, invoices, logs, bank statements, those kind of things. You have to show that the expenses were truly business related and that you kept your business and personal finances separate. If you mix personal and business funds, or you can't prove the expenses was for business, you can lose the deduction entirely and possibly face penalties. And if you start claiming everything as a business expense, you're not being clever, you're just inviting an audit. Home office deductions know who qualifies. So only sole proprietorships and certain partnerships can actually claim the home office deduction directly. Corporations, including LLCs, taxes corporations, cannot deduct the home office the same way. They have to either reimburse you under what's called an accountable plan or pay you rent for use of the space. So the accountable plan option is generally better. It allows reimbursements without creating taxable income for you. Paying rent from a corporation to you personally adds complexity and can create additional reporting issues because then you have rent income on your personal return. One more thing, putting your personal residence into your LLC does not make your home expenses deductible. In fact, it can create significant tax problems, especially around depreciation recapture and loss of your home sale exclusion later. Other deductions people misuse after forming an LLC: travel and meals. So you can deduct business travel that's primarily for business, not personal trips. And meals are generally 50% deductible. They must be directly related to your trade or business, not like a personal perk. Entertainment. Entertainment is still not deductible at all after 2017, with very small exceptions for certain kinds of promotional things or employee events, like an employee Christmas party. Startup cost. You can deduct up to $5,000 your first year, but the rest must be amortized over time. Your entity structure doesn't change any of those rules. You still have to follow the same IRS standards. So some common pitfalls I see: treating personal expenses as business expenses. Only the business portion counts. Mixed use items like vehicles or phones have to be specially allocated. assuming the LLC itself gives you tax benefits. Again, it doesn't. The benefit is really legal protection and administrative clarity. It's not automatic tax savings. Failing to keep proper records. The IRS expects detailed receipts and clear separation between personal and business funds. Or misunderstanding the ordinary and necessary test. Personal convenience doesn't make something deductible. So what does an LLC actually do? An LLC gives you legal protection, separating your personal assets from your business assets, and some flexibility in how you're taxed. But it doesn't create any new deductions. It doesn't make your personal spending business related, and it doesn't grant you permission to write off your life. You still have to follow the same Section 172 rules, maintain clean books, and file correctly based on your tax classification. So really the bigger point here is if the only way your business can make it is by scamming for fake deductions or bending the rules, the answer isn't to find sneakier ways to commit tax fraud. The answer is to fix your business. Healthy companies don't survive on loopholes. They thrive because they're profitable and they're managed well. Real tax planning can absolutely save you money, but it starts with a real functioning business. So form an LLC if it makes sense legally. Just don't confuse it with a magic wand for deductions.